As expected, the European markets have opened in the red. And to get a sense of what really the outlook for the European markets going forward is, we've got Gustavo Bagatini, who's a senior European economist at RBC Capital Markets. He joins us on the phone line from London. Now, Gustavo, to begin with, what do you believe the big trigger that the equity markets will be looking for going ahead? Would you say it's going to be the Spanish budget tomorrow?
Well, I'm sure the Spanish budget will be an interesting point, but I'm not sure it's going to be quite the trigger. I think what the Spanish budget will do is it will bring into light what the extent of the harshness of the austerity measures that the government will have to bring in. We already know that over the first couple of months of the year they've been spending quite a bit, and partly that's because they're paying down arrears from last year, and we already know what their target for this year. So I think the news coming out of that will be relatively limited. More important is actually the result of the summit that starts tomorrow and ends on Saturday, in which European leaders are expected to sign off on the size of this bailout fund that they're going to have, and indications from the Germans are that that's going to be the two existing bailout funds, or the one that's existing currently and the one that's coming in this summer, will be allowed to run in parallel, increasing the size of the firewall from 500 billion to about 700 billion in total.
Gustavo, you have the European markets which have been in the firm grip of the bears for the past few days. Yesterday they hit a 3-week closing low. Do you believe that in light of all of the kind of problems that we're facing, particularly with the European region itself, that you'd be circumspect on the region now?
Well, I think the issue is that, even if you leave aside the current low in the sovereign debt crisis, we're still talking about a region whose economy is likely in recession. It's probably going to be a relatively shallow and short recession, but nonetheless, we're looking at an economy which has significant decreases in growth this year across the periphery. So, above 1%, 1.5% in Italy and Spain, and beyond that in Portugal and Greece, and even in the core countries, we're still going to see relatively muted growth. So we're expecting German growth this year, for example, to be on the order of about 0.8, 0.9%. So nothing to write home about, but definitely faster than the periphery of Europe. And that really is just going to mean that the divergences that already exist in the area, and which were part of the problem with the sovereign crisis in the first place, are only going to get exacerbated.
All right, Gustavo, we leave it at that. Appreciate you taking out the time to join in. Those are the European markets. They got off to a fairly dismal start, but are seen recovering. Although mildly, they are defending the red line as we speak. But in the meantime,